Hi, good afternoon. I apologize in advance if this video is not of the same quality as you're used to seeing from other people. This is my first time doing this, and I'm a bit nervous and unpracticed in it, so please bear with me for a little bit. One of the most common questions I get in tax advising and business is, when should I become an S-corp? This is something common among entrepreneurs because it will save them a lot of money on taxes, but it does come with its own set, of problems and as well as benefits. So normally people wait too long to convert to an S-corp instead of doing it too early, but you can do it too early. The reason everyone wants to become an S-corp is because it lowers your tax rate quite significantly in some cases. But before you can become an S-corp, you need to be making money in your business, and a good bit of money too, at least compared to the median income in the US. So for instance, if your business is making less than $40,000 a year net, that's profit, that's not the top line, that's the bottom line, then you don't have any business considering becoming an S-corp yet. It's just going to cause you more issues, because you're going to have to put yourself on payroll. You'll be paying yourself less than minimum wage probably. You'll have to pay for the extra tax return. It becomes a giant headache. Most people won't see any significant savings from it until they're making $50,000 or $60,000 a year. After that point, however, you really need to be considering the S-corp election. When you get to that point, you're going to start saving a whole bunch of money in payroll taxes. What the S-corp election does for you is it makes your LLC, the business you've been filing on your 1040 as a Schedule C, a separate entity that files its own tax return. The money then flows through to you. This means that instead of paying income taxes and payroll taxes on everything you make, you only pay income taxes on everything, plus the payroll taxes on what you pay yourself as a salary. That's 15.6% of your salary. That is what you pay. That is both halves of Social Security and Medicare taxes. That's the self-employment taxes you pay when you file your Schedule C. When you convert to an S-corp, you pay yourself a salary. It's required by the IRS. You can't just become an S-corp and then not pay yourself a salary, and you pay the payroll taxes on that part of the salary. You get a paycheck every month, just like if you were a regular employee, and you get a W-2 at the end of the year. That doesn't limit you to only taking that much out of the business, of course. You can take distributions over and above that and still make your cost of living no matter what you're paying yourself. You're going to pay income taxes on everything you make regardless. So the sweet spot for conversion is usually $60,000 to $75,000 a year. It can make sense if you're making less than that, depending on circumstances, the type of business you run, etc. But under $40,000 a year, you shouldn't even consider it. And if you're making 125 or more, you should have done it a long time ago, because you've been paying a lot of extra taxes that you didn't need to make. The second thing you need to consider before you convert to the S corporation is, can my cash flow sustain it? Remember that cash flow is the lifeblood of every business. If you don't have cash, you don't have a business. So look at your net profit for the year, look at your cash flow, and then decide if you're ready to seek the S-corp election. It's a form you fill out with the IRS. Once they accept it, you set yourself up with a payroll provider, pay yourself a reasonable wage, which is another topic in and of itself, and start filing your 1120S every year, and then you get a K-1 that goes on your 1040 along with your W-2. I'm a licensed tax accountant. I have an enrolled agent license, an MBA, and I would be happy to answer any questions you have, or if you need help with conversion, contact me. My contact information is below. Thank you and have a good day.